Hello and welcome to Crypto Weeklies. Today we are going to discuss about Internet Computer and its token ICP, conduct machine learning based price analysis and accumulation strategies and regression analysis. None of the content is financial advice. The chart that you are seeing on the screen is that one of the accumulation strategy based on the regression function wrapped around the price action for ICP, which is color coded based on the risk level between 0 and 1, calculated using how overheated or cooled down the market has been using regression analysis. Right now the fair value per this model for ICP is at around $8.35. The price is slightly above at around $8.65. You can check over here. Over the last 24 hours or so, ICP has been one of the most rallying cryptos by top 100 by market cap. From top 100 by market cap, around 8.5 or 8.75% rally. Price action slightly above $8.60. You can see the price has now overshadowed the fair value regression line. The risk level is at around 0.17. Again, for this model, this is the second best time to dollar cost average ICP. You can see over here. Proportionally speaking, the risk levels when some shorter term peak occurs, you can see over 3 to 4 times. Whenever the price goes close to this red dotted line, that's when major peaks and occur, and price kind of mean reverts back to the bottom regression band first by going to the fair value. Right now that peak regression valuation for ICP is at around $14.50. Therefore, right now per this model, the peak valuation at around $14.50 and the bottom regression at around $5.25. Those are the three key levels: the $8.50, the $14.50, and the $5.25. They all constitute between the most likely price action for ICP for the foreseeable future. So in terms of if we were to, again, none of the content is financial advice. If we were to go to machine learning based model trend on weekly price action of ICP since the token launched, the base case scenario per the model till end of year is, if there weren't any bias to the bullish or bearish side, the price action could be between $7.50 and $8.14. The bull case between $8.88 to about $14.14. So that's again one of the confluent level with the regression based peak and also the machine learning based price forecast if market were to exhibit one standard deviation bull case behavior. If on the other hand market sells off in Q4, the price action could see as low as $4.62 to between $7.22. And if you take a median valuation of this bear case scenario, that is again coming very close to the $5.25 that we just discussed. And if you want to know how these machine learning based forecasts are calculated, the all of the content, at least the one that is shown on cryptoweeklies.com, is available for free. You don't have to pay or sign up for anything. The tabular valuations are available. At base case is the column in the middle. To its left are the three bear cases at 1 standard deviation, 2 standard deviation, and 3 standard deviation confidence level, and to its right are the equivalent bull cases. So standard deviation is something that will focus more of our attention in 2025, when the market historically in the post halving year for Bitcoin exhibits that mania phase. Right now the most of the rallies, barring the behavior that market exhibited during February March of 2024, has been within the 1 standard deviation levels. In terms of analyzing the current regression levels using the polynomial regression function yet again, and wrapping the 1 standard deviation bars and 2 standard deviation bars, both 1 standard deviation and 2 standard deviation bars, to get a hold of what is theoretically possible, what would constitute to a 2 standard deviation peak like we had in March of 2024, when the market was kind of overheated at that point in time. Right now price action is close to the fair value, as we just saw. The 1 standard deviation peak at around $10 and $11, the 2 standard deviation peak at around $14.75. Again, that would be close to the key levels that ICP hit during the March 2024 peak. In terms of the other accumulation related models, the SMA based accumulation model, the risk levels for per this model is a kind of elevated at around 0.76. That is because the price is very close to the 20-week moving average. This is again a short term model. Again, the purpose is not to provide the details of what is a good buy zone over a longer period of time, but just to identify if we are DCing at a point where the market is overheated. And for this model, whenever the market is whenever the price action has more than 0.8 or 0.9 risk, that's when this model has been very close to identify peaks, like it did in February 2023 when the risk level for this model was at 0.8. Right now the risk level is slightly below that at 0.75. So I just wanted to provide an highlight. And if you have a longer term accumulation strategy, ICP has always throughout its history has been trading at a price lower than the time weighted average price. That's because of its monumental crash during 2021 May 2021 crash. So that's again one way to look at the market. To summarize everything, the confluence between the machine learning price forecast and the DCA based regression valuation between the 525 and 1450 level are the most likely price scenarios. In terms of the wider market and their risk level, they are again at a latest risk score is at around 0.17, again at green zone over here, which is typically a low risk regimen, like crypto is has exhibited since July of 2024. Most of the time has been spent, most of the August and all of September thus far has been in this low risk zone, in the green zone. Calculated this particular peak value analysis is calculates risk and normalizes it between 0 and 1. The lower the risk, the better to enter the market. The higher the risk, the better to exit the market. The last but not the least is the Bitcoin and ETH related risk levels, which provide a guideline to what altcoins could do. Right now, both risk for BTC and ETH are going down. ETH risk at around 0.2, BTC risk at around 0.24. That means we are in a low risk environment per this analysis. This is calculated by 20-week moving average, proportional difference between the price and 20-week moving average between for both Bitcoin and ETH. So with this, what has become clear is ICP at this point definitely exhibiting some of the lower risk for accumulation. None of the content is financial advice. If you enjoyed this video, please give us a like and subscribe to the channel, and also check out the other videos on the channel, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.